Hello, ladies and gentlemen. It's happy Friday to you, and good morning, ladies and gentlemen, once again. And let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, please type in hi in the comment section so that we can get the business started. I would like to see some feedback, please. If you can see my screen, you can hear my voice clearly, and let's type in hi in the comment section, please, so we can get this started. So let's see what we have right here in the comment section. Okay, 396, good morning. Thank you very much. Okay, 4216, Russian 22 high, thank you. All right, Obiazis Esther. All right, good morning to you, Esther. Vinlod, I hope I pronounced that correctly. Varelik, how are you? Hello, 2199, good morning to you. Thank you very much. 221. Hey, Carrie, how are you doing today? Good morning to you. Dino, good morning. Thank you very much. So I want to assume that we are good to go to this morning with these positive feedbacks that we have here. I'm so excited to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we take a technical dissection of the current market structure in anticipation of the New York session. Well, as usual, this is the last trading day of the week. It's a Friday, and we all know what we do. It is peculiar with Fridays. Today is always profit-taking activities. And one thing about this is that on Friday, we normally see price action move in the opposite direction of where it has been going since the beginning of the week. And this is very psychological, as majority of the participants in the market who had actually made money from the previous move will definitely want to be going into the weekend taking off some of the profit they had made so far this week. And what we are going to be seeing on the chart, it's going to be reflected in the form of price moving in the opposite direction of the prior leading price action. So we are going to be looking at this in details. We are going to be taking this into consideration while we take a position ahead of the New York session. So we have been monitoring, I think, 5 pairs since the beginning of this week. We are going to be looking at how well the pairs are doing and how we started the week on the pairs. And we shall be doing rounding of activities, as we shall be taking some profit, moving our stop loss accordingly to protect the current position so that we don't get caught up in any sudden pullback. And at the same time, we shall also be anticipating positioning ourselves in such a way that we can catch any potential opportunity for today. So with that being said here, you're welcome once again. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here on a daily basis is to come together here as a family to position ourselves ahead of the New York session. So we have some couple of pairs that we have been monitoring. We do a review on these pairs. We talk about how to manage the trade and how to position ourselves ahead of the New York session as always. And initially it might look a little bit complicated, but I promise you I have to try to stay tuned in, be with us through this one, and continue to be with us on a daily basis, 10 a.m. UTC. And with time, you get to understand how this works, and you will be able to use the information you have gathered here to make your own individual decision on this instrument. So once again, I welcome you on board, and at this point, let's dive into the current business. Well, the first thing we normally do as usual is to take tabs on the fundamental perspective in the market, as we want to see fundamental expectations that will be bringing some liquidity into this market. So it's peculiar with this fundamental events to bring some liquidity into the market. So Even if we have technical perspective, we have decided to have a position ahead of the New York session. We need this fundamentals that will bring some liquidity into the market to give us that movement we need that will make us make profit. So with that being said, let's go into the economic calendar here. And for today, Friday, March 24, and considering the pairs that we have been monitoring since the beginning of the week, we have four macroeconomic events we are looking forward to today. And one of these events has already happened. That's like 2 hours ago, and that is the what's it called again? The hold on a second. S&P Global S&P Global's preliminary manufacturing and services PMI survey for the month of March, which is obviously going to be affecting the pound sterling. And look at the figure we have here. We have a 52.8 actual figure, which is coming in on the negative side of 0.09, as it was below expectation here and even below what we had in the previous month. And we're beginning to see a decline in the pound, especially the GBPUSD that we have been monitoring since the beginning of the week, hereby making us make some money off that market. We are going to be looking at that in a moment. Then the next one we are going to be expecting for today is the durable goods order, which is for the US dollar here. And we have something positive coming in according to the consensus we have here, as against the minus 4.5% of the previous month. Consensus are projecting a 0.6%. So we shall be looking forward to this event to see what the actual figure is going to be. Will it be beyond expectation or below expectation, or will it just come in as expected? Then the non-defense capital good order is also coming up in 2 hours from now. I think 2 hours 30 minutes from now. And that one is coming in. We have a consensus of 0%. So we are going to be looking forward to that actual data too as well. Then we also have the retail sales month on month. This is for the Canadian dollar. And we have a previous data coming in at 0.5%. And the consensus are projecting a 0.7%, which is more of on the positive side. We shall also be looking forward to if this is going to be coming in as expected, beyond expectation, or just as expected. So these are the events we are going to be looking forward to today, and we are going to be diving right into the market structure to take a technical decision based on the current market structure to decipher what is going on in the market and how we intend to take advantage of these trading opportunities. So on this note, let's dive into the current market structure. I can see Cast comment. Good morning, Cast. How are you doing this morning? We are going to be doing USD of course. It's part of the instruments we have been monitoring since the beginning of the week, so stay tuned in so that you don't miss out on that. Is it? Oh, sorry, we are not treating the USD I will try to see if I can include that at the end of the session if time permits me. Good morning, Liberdate. How are you doing this morning? Good morning to you. All right, so the first commodity we are going to be looking at, as usual, is the US oil. And on the US oil, we have been very, very profitable on this commodity since the beginning of this week. And we have actually been buying the US oil ever since we started noticing that buy pressure resumed just around the $65 area, which happened to be the lowest point price action has ever been since December 2021. And the same time, that level also is falling just right around the support line of that descending channel we identified on the 4 hours time frame. So for those who don't know what I'm talking about there, don't worry, we are still going to be taking a look at that in a moment. So after identifying the buy pressure here, we saw that since then price action had continued to find higher highs and higher lows, leading to the breakout of that resistant line we identified at the $67.50 level at the beginning of the week. And with the breakout of that structure, remember, we had the buy stop order at this point. So we had, at this point in time, we had our first position triggered for the week, and we were lucky enough to ride the move all the way to the upside, where we were adding more position at breakout of significant structures like the $68.50 level, we triggered our second position here, and we also had another one at the $69.40 area, which triggered the third position. Then we had another one here at the $70 area. And during the live session yesterday, I told us all that we want to continue to see price trade above the $70 level for us to be comfortable in our buy position. And I also told you that we want to be having a buy stop order just above the $71 area in anticipation of adding more position to our existing trade. So we had a total of about 6 positions running on this one. We saw price break out of the $70 area. Price moved about how many pips was that? It moves about 70 pips in our favor, and I hope you moved your stop loss accordingly to secure the current position as we were taking out as price action came back into the entry point, taking us out of all our existing positions. So we were able to make roughly over 600 pips on that buy position alone on the USOil. So congrats to everyone who has been part of this profitable move, as you would have made some money for the week, and we will no longer be in a compulsive mood to take any position for today. So let's see what is really going on in the market right now. Well, the first thing I would like to state here that since price action got into that range between the $71 area and the $70 area, what did we notice here in the last 48 hours? We can see here that sellers continue to take over the market. They're getting all attempted by the buyers to break out of that structure, though we saw a little breakout of the structure here yesterday during the New York session, but it didn't last long as we saw selling momentum take over the market, leading to the final breakdown of that $70 area one more time. And remember what I told you yesterday. I told you that if price action ever breaks down the $70 area, retest of structure will definitely be welcoming a sell position in this market, and I hope you took advantage of this move. And for those who took advantage of this move, well done to you guys for being on standby to catch that move, as if you are taking it at the retest of the $70 area, you will be having about 270 pips in profit at this point. Personally, I missed this one at the $70 area, but was opportune to be part of the breakdown of the $69 area to join that trend continuation to the downside. So for those who are taking advantage of this move right here, well done to you for being on standby to catch these opportunities. And you know what we do next whenever we have this kind of movement? We want to be securing our positions by moving our stop loss accordingly to lock in some profit, as we might likely see some pullback happen anytime soon. And with this kind of situation right now, for all the sell positions we have on the USOil, I will be advising us to move our stop loss to somewhere right below the $69 area, just somewhere between the $68.50 level and the $69 area, as that area also shares a beautiful confluence with that resistant line that we identified on the 4 hours time frame. Now, talking about the resistant line here on the 4 hours time frame, which I said I'm going to be showing you the importance of that structure, which I made mention earlier, had the support line here at the $65 area. So let's quickly run through the daily time frame to see what is really going on in this market from an holistic point of view, and we shall be coming back down here to make a decision for today. And for those who had missed out on the sell position here, don't worry, we shall be coming back to see, as I think the market will be giving us a second chance to be part of this move to the downside. Now, going on to the higher time frame, we shall be looking at the 4 hours time frame, and here we are on the 4 hours time frame here. And well, the first thing we observed at the beginning of this week is the fact that price action has been bearish throughout the month of March. And to further emphasize the strength of the sellers in this particular market, remember we were able to identify this descending channel after we connected the series of lower highs here, which gave us the resistant line of that descending channel, and then we connected a series of lower lows here, which gave us the support line of this descending channel that you can see on your screen right now. Now, the next thing we did here was to look out for how price reacted to that support line of that descending channel. And prior to that touch of the $65 area, we saw how the rest support line of that descending channel has been rejected with strong buy pressure. As you can see, the nature of those candle looks more like an hammer candle, which from a technical standpoint is a beautiful signal that buyers are gradually coming in this market. And at the beginning of the week, we saw our price action was trading between the $65 area and the $66.50 level, after which, you know what, no, sorry, I think the 65 and the $67.50 level to give us an indecision in that market. And you know what we look out for whenever we have this kind of setup? We want price action to break out or break down of that structure to give us a trading opportunity. And luckily enough for us, we were part of this move as price action broke out of the $67.50 level to the upside. Now, that is not the important thing right now. The most important thing right now is the situation here as the bullish momentum rose back into the resistance line of that descending channel. And what did we see when price action came back into the resistance line of that descending channel? We begin to see sharp rejection of that structure in the last 48 hours to further emphasize the strength of the sellers in this particular market. And looking at the descending channel here being the resistance point, you can see price has been respecting this trend line since the beginning of this month, and it appears that price wants to be respecting it again one more time. And this gave us a clue that price will respect it after we saw the bullish trend line, which was supposed to be our yardstick for trading activity for this week, broke into the downside during the later part of the New York session yesterday with a huge engulfing bearish candle to further emphasize the strength of the sellers at this point. And if you recall what I said here yesterday, that a breakdown of the $70 level will definitely be an opportunity for us to join a momentum shift. And luckily enough for us, the market gave us a second chance following the breakdown by doing a retest of structure, a sharp retest of structure there, further emphasizing the bearish expectation. Then boom, price continued to the downside here. Right now, price is back below the resistance line and within the descending channel at this point. Hence, we are within a strong sell territory in this market. So I would like to extend the resistance line a little bit further so that it can capture our price action in going forward. Now, with the situation of things right now, price is currently trading at around the $67.50 level. And from this situation here, I am of the opinion that price might continue to go to the downside, respecting the resistance line of the descending channel, probably into the support line of the channel here. So if I extend the support line a little further into the future, we should have something like this. So let's see if price will ever get to that point, or probably it will get to this point here where we have the $65 level, which has been the lowest point price has ever been for this year. Now, another thing I would like to show you here on the US oil is the daily time frame. There was a structure there that I laid emphasis on at the beginning of the week, and which is more or less about the nature of the breakdown of that $70 area. So I will be zooming into that current structure so that we can quickly capture this before time takes us out of the session. So right now we saw the breakdown of the $70 level here last week, and you all know from a technical standpoint that whenever price breaks down structures like this, there is a likelihood that price will do a retest of structure in anticipation of another wave of bearish momentum to the downside, which I actually acknowledged at the beginning of the week. I told us all that as soon as price gets into the $70 area, we are going to be patient to see our price action will be reacting to that structure to determine if we are going to be adding more buy position to our existing trade or get ready to sell at that point. And in the last couple of days here, we saw sharp rejection of the $70 level, where both candle closed in the form of a shooting star, which from a technical standpoint is a sign that sellers are still very present just right around the $70 area, hereby negating all attempt by the buyers to climb to the upside. And since the beginning of today, we are beginning to see sell pressure resume, and this move is going to the downside. Now, how far will this momentum go is what we don't know now, but I be rest assured that a breakdown of the $65 level will be sending a massive shock wave to the market that will send price crashing further to the downside. But we are not yet sure if price will ever get to this point, because there is a tendency that the $65 level could turn out to be a bullish platform for another wave of bullish momentum, and that will only happen if price is unable to find a new low, that is, price is unable to break the previous structure here. Then we might likely see a situation where price action will transition into a potential reversal pattern in the form of a double bottom structure, where a breakout retest of that structure will give us a confirmation of another wave of bullish momentum to the upside. And if you look at the $70 area, it has been a strong buying niche in this market, which has lasted over 3 to 4 months in this market. And if it so happens that price action climbs above that structure, that area has a strong memory for buying power. So at this point in time, we want to see how far this bearish momentum will go. Is it going to break down the $65 level to the downside, or are we going to be having a reversal pattern just before this previous low here in anticipation of another wave of bullish momentum? So join me as we scale back down into the 1 hour time frame, so that we can see how we could actually take advantage of any trading opportunity around this area. So currently, price action is trading around the $67.50 level, so we shall be focusing on this area right on our lower time frame. So let's scale back down into the 1 hour time frame here, and here we are on the 1 hour time frame, and that is the $67.50 level, which we just acknowledged on the daily time frame. Now let's look at how this level has been doing in the last couple of days or weeks so far in this market. Now, since the beginning of this week, remember this area was a strong selling niche. This was where price action started this week, and it happens to be our resistant line for this week. At the first 36 hours during this week, this area was rejecting all bullish attempt in this market, hereby it making it our resistant point. And right now, we saw after the breakout of that resistant line here, this is the first time price will be coming back into the structure since Tuesday, when the trend that structure was broken to the upside. And you all know from a technical standpoint that whenever price action breaks out a key structure like this, there is a likelihood that price action will be coming back to do a retest of that structure in anticipation of another wave of bullish momentum. So these are one of the things we are going to be looking at as we dissect the current market structure. So now, with the expectation from this theoretical understanding that a retest of structure will happen, and one thing you will notice here in the last 30 minutes in this market, that we have been witnessing buy pressure resume around the $67.50 level. So I have told us all that for those who have joined the sell momentum since later part of yesterday, you might want to be moving your stop loss to secure this current position, as we need to see how price action will be reacting to the structure to determine if we are going to be adding more sell position to our existing trade, or we might be getting ready to buy the USOil for today and going into the next week. Now, with the situation we have right here, let's hold on. Move your stop loss accordingly, secure your current position, and let's see how price action will be reacting to the $67.50 level in the next couple of hours to decide what our next line of action will be. Now, what we want to be seeing during the New York session today around the $67.50 level are only two things. And the first one is, if it happens that price action breaks down the structure right on our lower time frame. Right now, we want to be looking at our lower time frame, like your 5 minutes, 10 minutes, 15 minutes, or even as low as your 3 minutes time frame. Look out for retest of structure that is selling pressure resumes, buyers find it difficult to break above the $67.50 level, and we start seeing selling pressure around that area. Then we want to be heading to add more position to our existing trade to ride the move all the way to the downside. And if a further breakdown of the 65 level happens, that will be welcoming additional position at the appearance of selling pressure below that structure. So that is how we want to be selling the US oil for today. However, if we start seeing selling buy pressure resume around this area, we are not going to be getting too excited to join a bullish momentum here, as we need further confirmation to happen, which is likely going to come in the form of a breakout of the resistant line of that descending channel to give us a clue that buyers insist to stay out of that descending channel. And only if a breakout of this descending channel happens can we be thinking of buying the US oil. And if you look at the structure around the descending channel, the resistant line of the descending channel, we have a key level that we can use to guide our trading activity for any buy expectation in this market. So if a breakout of the trend line happens, that is the resistant line of the descending channel happens, and buy pressure resumes above the $68.50 level, then we want to be looking out for buying opportunity on this chart. That is the only way we want to be buying the US oil for today. Now, another thing about the resumption of buy pressure around the $67.50 level is that price could come back, do a retest of the structure, which shares a confluence with the trend line, selling pressure resumes around that area to incite another wave. So that is why we cannot join a buy position here yet, as we need for the confirmation that it breaks out the structure for any buy opportunity. So as long as price remain below this bearish trend line for today, we shall feel comfortable in our current sell position. So like I said earlier, for those who already have the sell positions running, ensure you have moved your surplus accordingly to secure this position as we wait and see how it reacts to the $67.50 level going forward. If you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. But be rest assured, I will be checking the comment section from time to time to see if there are any questions for me. So with that being said, here on the US oil, I will be moving on to the next option, which is the US tech. Now on the US tech, what did we see here on the US tech? In fact, because of yesterday, we saw a huge volatility in the market, which incites a bullish momentum here, and I hope you took advantage of that move as it moved according to what we talked about. But before I go into that detail, let's quickly run through how the week has started for us here on the US tech. So zooming out into the first trading day of the week, and we saw how price action started the week at around the 12,620 level. This was yes, 12,620. We saw sell pressure resume. So the week started on a bearish note here, and we saw price action drop into the downside, hitting the 12,410 level. Price action hits the 12,410 level, which happens to be the support line for the week, and we saw buy pressure resume around that area. And one thing I told us all on Monday during our morning live session on Monday is that we want to be using this bearish trend line as a yardstick for our trading activity for that week, and that if a breakdown of the 12,410 happens, the bearish trend line here will be guiding our bearish momentum. However, if a breakout of the bearish trend line happens, we shall be looking out for buying opportunity. So with a structure around the 12,550, breakout of the bearish trend line, retest of structure a couple of times, it was a beautiful signal for us to join that bullish momentum. And at that point was the first time we had our buy position for the week, and we were able to ride the move all the way to the upside, adding more position at the breakout of that resistant line we identified at the beginning of the week here. So we had these positions run. The first position ran with about over 200 pips before the sell momentum began, and the second position went to about 150 pips before the sell position began, and it was a profitable week profitable day for us, at least for the first half of this week. Now, going into the second half of the week following the FOMC on Wednesday, we saw this huge momentum that shook out everyone in this market on that Wednesday, and we actually missed out on this move. But one thing we saw here during the live session yesterday was this bullish momentum that began in this market following that impulsive move to the downside. And one thing I told us all yesterday, that I'm seeing this retracement move, this bullish move, as a retracement of that impulse leg. And in so doing, I told us all that we could see a situation where price will come into this potential sell window we identified here during the live session yesterday, where I told us all that we want to be looking out for reversal pattern within this area to join a decline to the downside. And as you can see what happened here yesterday, I told us all we have this 12,675, which I said we were going to be using to guide our trading activity for yesterday. So this is what we said here during the live session. So we were around this 12,675, where I said a breakdown of both the 12,675 and the trend line here will be a signal for a momentum shift. So we want to see a breakdown retest to sell the US tech here. And if a breakout retest, that is buying pressure, resumes above the structure, we want to be buying that one. And we actually bought as soon as we started seeing buy pressure resume around that area, and price action moved about 220 pips in that direction before the sell momentum began. And for those who are taking advantage of that opportunity there, well done to you for being on standby to have caught that move. And with the situation of things here in the last 12 hours, it is quite obvious that price action is now going through some level of selling pressure in this market. As you can see, following this move to the downside, we saw price come back into the sell window. We saw another sell momentum began from that area. And if you are joined there, well done to you too for being on standby to catch that one, as we add a sell stop, sell limit order within that sell window prior to that move to that area. Now, with the situation of things right now on the US tech, you can see we have been quite choppy in this market in the last 48 hours. And we need to be very, very careful here, as anything could actually happen based on this current structure. So for those who have a sell position running at this particular point in time, kindly move your stop loss to secure your current position, and the most appropriate area to secure the sell position should be somewhere around the 12,750, just at the tip of that sell window area. Secure your position as we look forward to see how price action will be reacting to the 12,675. So for me on the US tech here, we shall be leaning towards a bearish momentum. As you can see, price was unable to break the previous high here. So we have a lower high, so we have a new low at this point, and I'm hoping that we're going to be having a lower low on this market. So anywhere below the 12,675 will be an area to look out for selling opportunities for today. So if you are looking for selling opportunities, let's continue to wait. Look out for more selling pressure below the 12,675 to add more position to our existing trade, and a further breakdown retest of the 12,620 will be welcoming additional position on this one. So the current sell setup in this market has a tendency of giving us multiple entries. So my advice is that you screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So on the US tech, we continue to look out for selling pressure in this market as we go forward. So that is that on the US tech. That is my perspective. So I'm holding on to a bearish bias. If you do have questions, feel free to drop your enquiries in the comment section below. So I will be taking the next 10 to 15 seconds to read through the chat, and I think you will give me some couple of seconds, please. I want to sort out something. Give me a moment, please. Okay. All right, we are back on again. Sorry for the breaking transmission. So let's continue with where we stopped. So like I said, on the US tech, we continue to look out for selling pressure on the US tech going into the New York session today, and we shall be using the 12,675 level as a yardstick for this selling opportunity in this market. So as long as price remain below the structure, we shall continue to look out for more opportunities to add to our existing sell position in this market. And I also told us that the current sell setup has a tendency of giving us multiple entries, as we have structures like the 12,620 where we could be adding more position to our existing trade. Then we also have another level here at the 12,550, which has also at one point in time during the course of the week served as a determinant of price action. So if a breakdown of that structure happens with selling pressure below that level, we want to be looking out for more opportunities to add more position to our existing trade. So that is that on the US tech. If you have questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair right now, and the next pair we shall be looking at this morning is the GBPUSD. And on the GBPUSD, let's quickly run through how the week has started for us on the GBPUSD. So if you recall vividly, the first thing we observed at the beginning of the week is the fact that price has been bullish since Wednesday of last week's trading session. And to further buttress the strength of the buyers in this market, we were able to identify a couple of trend line here, and we had the major one, which is the thick line on your screen right here. So when we connected the series of higher lows here, we had that major bullish trend line figured out. Then we saw here that on Thursday's trading session last week, we saw a deviation to that bullish trend line, as we saw price found a new lane of higher low, and we had this temporary bullish trend line, which was emphasized with this lighter bearish bullish trend line that you can see on your screen. And one thing we noticed at the beginning of the week was there was a simple flat channel where we saw that price action was indecisive as it fell within a consolidation phase during the first I think 12 hours of the beginning of the new week. We saw that consolidation phase there, and you all know what we look out for whenever we have this kind of consolidation phase. We'll have to wait, hold on, and remain patient for price action to either break down the channel for selling opportunities or break out of the channel for buying opportunity. And the later was what happened here during our live session here on Monday. We had the breakout of the structure just live during our live session. We saw that breakout happened, and we were part of that bullish momentum to the upside. And in fact, that move gave us price moved about 75 pips before the sell momentum began at around the 1.2280 level. Then we also added another buy position at the breakout retest of the 1.22450 level, where price moved over 40 pips in our direction before that sell momentum happened. Now fast forward into Tuesday's trading session. During our live session on Tuesday, we saw our price broke down that temporary bullish trend line for the first time in a couple of days, and that was a signal for us that we might likely be seeing a bearish momentum, probably a retracement back into this major bullish trend line. And we were part of this move. As soon as price broke down that 1.22450 level, we saw a retest of structure, giving us further confirmation of this potential move to the downside. And we were part of that move as price moved about 60-70 pips in our favor. And I told us all on that same day that we want to see how price action will be reacting to the 1.2200 level to decide what our next line of action will be. And one of the reasons why we wanted to see how price action will react to that structure was simply because it shares a confluence with that bullish trend line, which has been supporting that bullish momentum since last week. And what did we see when price got into the structure? We started seeing bullish pressure resume in this market. price action broke above the 1.22100 level. That was the resistant line for the beginning of this week. Remember, that was our resistant line. So we saw the breakout one more time, retest of structure, and considering the fact that price action is along that key, right above that key level that we said we were going to be using to guide our trading activity for this week, it was a welcome opportunity to add a bullish momentum. And we saw this move all the way to the upside as price action from that level, price action moved about 85 pips on that one. So we were able to make some profit off that move too as well. Then during the live session yesterday, this is what we saw. Okay, on Wednesday, we saw the situation here on Wednesday where we identified the fact that price is back into a strong sell window. As you can see what happened around this area on Monday. We saw price come back into the structure on Wednesday morning. And what I said here is that we should remain patient, as if we could see a reversal pattern here, we would likely want to be joining that decline to the downside. And to further help us to be able to identify a trading opportunity around the structure, we were able to identify a simple setup where price action traded between the 1.22990 level and the 1.22800 area. And what we said here is that if price breaks out, we had more buy position, and if price breaks down, retests the structure, we sell at that point. And exactly what we saw, price broke down, retest structure, and it also moved about 60 pips in our favor, and we were able to move our stop loss accordingly before that bullish pressure began. And later on that day, we actually missed this one here as we saw this sharp move to the upside, as following the FOMC on Wednesday, taking out of our sell position at I think about 50-40 pips thereabouts on that one. Now that we are going into the New York session today, what is going to be our plan? What are our expectations in this particular market? Well, yesterday we saw the sell pressure here around the 1.23450 level here. And I told us all that there is a high chance that sellers will be coming in this market, and that if a breakdown of the 1.22850 level, we want to be selling as if price breaks down the 1.22850 level, it would have taken out this bullish trend line to further emphasize the strength of the sellers in this market. And that was exactly what happened. And we saw price break down the bullish trend line, retest the structure a couple of times before moving to the downside. And if you had been part of this move, well done to you for being on standby to catch this move, as you will currently be running with about 80 pips in profit at this point. And you all know what we do whenever we have this kind of situation that price has moved in our favor. The next thing to do is to secure this current position by moving our stop loss accordingly to lock in some profit. And based on this current structure here, I will be advising us to move our stop loss just right be above the 1.22450 level, as we need some room for price action to bid, as there is a tendency that price could come back and retest the structure in anticipation of a bearish move to the downside. So kindly move your stop loss accordingly. Let's secure this current position and see if we have more opportunities to add to our existing position. And for those who had missed out on this opportunity, well, let's look at the market and see if we have more opportunities to add more position or join this decline to the downside. So in that regard, let's scale up into the daily time frame. Let's quickly have an holistic view of what is going on in this market so far, and then we come back to the 1 hour time frame to make a decision for today. Now back to the daily time frame here. At the beginning of this week, this is what we saw on the daily time frame on the GBPUSD. And the first obvious thing about this current structure is the fact that price has been bullish in this market. And in fact, since the month of September / October of last year, we saw our price consistently found higher lows in this market. And to further buttress the strength of the buyers in this market, we were able to connect the series of higher lows here, giving us this beautiful bullish trend line that we have here. And one thing we noticed here during the month of February, that is the first day of the month of February, we saw price action break down that bullish trend line for the first time in the last 5 months, 5 to 6 months now, I guess. So this was the first time price action ever broke down that bullish trend line, which for me at that point was a beautiful signal of a bearish momentum. And this was followed by, this was just happened after the sell pressure identified at the 1.22450 level. So we saw price crash to the downside, coming back into that important demand zone at the 1.1850 level, and this was exactly where price action started the new year, just above that level, sharing a confluence with that bullish trend line. And following the crash here, price came back into that structure. Another new wave of bullish momentum began here. And at this point in time, one thing you will notice here since the month of February is how the 1.2200 level has been a major determinant of price action in the last couple of months. And if you look at the structure closely, since the breakdown of that bullish trend line here, this level has been a strong selling niche in this market, as every attempt by the buyers to break out of that structure has been negated at every point in time. However, during the course of this week, we saw how price broke out the structure, but for me, the momentum after the breakout of that structure wasn't that significant to emphasize the strength of the buyers here. As you can see, after the breakout of the 1.2200 level, we saw that in the last couple of days, we've been seeing sharp rejection of the 1.2340 level. And look at the candle for yesterday and for Wednesday candle, you can see that it closed in the form of a shooting star candle, and from a technical standpoint, a shooting star candle reflects the presence of sellers in this market. So for me at this point, I don't think the buyers were able to gain that significant momentum after the breakout of the 1.220 level, which is making me to lean towards a possible bearish move to the downside. And if we look at the structure here from a technical standpoint, following the breakout of this bearish trend line, we should be expecting that one point in time after a breakout of structure like this, that price might likely come back to do a retest of that structure in anticipation of another wave of bullish momentum. But how far will this go is what we don't know yet, and currently price is trading just right around the 1.2200 level, which for me is a critical point in this market, as we need to be patient here to see how price action will be reacting to the 1.220 level prior to the macroeconomic event today and post the economic event to determine what our next line of action will be. But if price breaks down that structure, then definitely selling pressure below this level on our lower time frame will be welcoming an additional sell position. And remember, those who are the sell position already, we have moved our stop loss accordingly to secure this current position. So at this point, let's scale back down to the 1 hour time frame. Let's see how price action has been reacting to the structure to determine what our next line of action will be. So scaling back down to the 1 hour time frame here, so we have the 1.2220 level. Is that so? Hold on a second. Let me look at that one more time. So we have 1.220, okay, 1.22. All right. So we have the 1.22 to focus on right now, and okay, that's it here. That's it here. So let's map that level out so that we can focus on that area going into the New York session today. So this is the 1.220 level, so I want to make it a little bit different from the previous structure we identified so that we can emphasize its importance around this current market structure here. So I'll give this a gold color a little bit so that we can see things more clearly around this area. So this is the 1.220 level, that very important key structure we identified on the daily time frame. Now with the situation we have here going into the New York session today, what are the structures we want to be using to guide any selling opportunity in this market? Obviously, we have been bearish, we have a sell position running, we have moved our stop loss, And one thing I want to do here is to bring out my line chart and then connect a series of lower highs here to emphasize the sell momentum in this market, and definitely that trend line, we shall be using it to guide our trading activity for today. So after connecting the series of lower highs, we have this bearish trend line here. So as long as price remain below the bearish trend line, we shall feel comfortable in our sell position in this market. Now, with the situation of things around this area where price is currently trading around the 1.2200 level, we might likely see some buy pressure resume. It's very possible. If you look into the past here, you can see that we have witnessed some buy pressure around that area at one point in time during the course of this week, and we might likely see it happen again. And if it does happen, we don't need to panic in our sell position, as price might likely be going through a retracement back into structures like the 1.22500 level, which also shares a confluence with our bearish trend line, where the option of respecting it is very high to incite another wave of bearish momentum to the upside. So if this happens and we start seeing selling pressure around this area, you want to be anticipating another opportunity to add more position to our existing trade. Well, in as much as we look out for selling opportunities in this market, we cannot ignore the possibility that buyers could come in. And one thing I normally say is that the market is a very fluid environment, and for us to be profitable in the market, we want to be as fluid as possible so that we can catch any move as soon as we identify the potential for that direction we want to catch. Now, with the situation here, despite a selling expectation in this market, we cannot ignore buyers coming in. And what we want to see within this market structure that will give us that confirmation and confidence to buy the GBPUSD. Well, for me, since I already said we are going to be using this bearish trend line as our yardstick for trading activity for today, we definitely want to be seeing price break out of that structure, which obviously shares a confluence with that 1.22500 level, to look out for buying opportunity. So to buy the GBPUSD at this point, we might see price break out of structure, retest, and we want to be seeing buy pressure around this area. Then we could take advantage of a buy opportunity just above the 1.22500 level. So this is the only reason, this is the only structure we want to be seeing in order to buy the GBPUSD today. But I doubt if that happens. I still think that the sell momentum in this market is still very strong. But if it does happen, we want to be on standby to catch that move as well. And if price does not climb to the upside, but instead continues to drop to the downside, then we are looking forward to selling opportunities at the breakdown retest of the 1.2200 level. So I hope we be on standby to catch these moves when they finally happen. You might also want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. I'm already out of time here. All right, so we move on to the XAUUSD. And on the XAUUSD, we have been quite profitable this week so far. And let's quickly run through what we saw here at the beginning of the week. So the week started on a bearish note here after we acknowledged this channel between the 1990 and the 1970 area. And to further buttress some possible reversal pattern to happen here, we identified a structure which looks more like a head and shoulder pattern. We have the left shoulder, we have the head, price drops to the downside, we have the right shoulder, and you know what we look out for whenever we have a reversal pattern like this. We want to see a neckline area which coincidentally shares a confluence with that 1970 level, which was the support line at the beginning of the week. And for this reversal pattern to be mature, we want to see price action take out the neckline, break down retest of structure to join that decline to the downside. And that was exactly what happened. Price action gave us about 350 pips in profit on that one before we saw this consolidation phase happen here during the course of the Wednesday's trading session. And this was prior to the FOMC on Wednesday, and we identified that level, and we also anticipated trading opportunities from that structure, as you can see here. So this is the structure here we identified during the live session on Wednesday. So we had the channel between the 1,936 and the 1,945. A breakout retest triggered our buy position, and boom, price moved in our favor, and we were able to make at least over 300 pips in profit in that market. So now, with the situation of things now, yesterday's trading session, we also saw an opportunity to buy. Remember, we had a buy stop order above the 1,985 level, which triggered a buy position. Price moved about 150 pips in our favor before the sell pressure resumes. And now, zooming into the current structure here, you will see that price action has retested that $2,000 mark 3 times this week. As you can see, the first rejection was here, though price action broke it out a little bit to the upside at that point. Then the second one came in yesterday during the later part of the New York session. We saw another sharp rejection, but price was unable to break out of that level. Now, in the last couple of hours, we saw another sharp rejection, where the last candle here has just closed in the form of a shooting star candle, which is a sign that sellers are still very strong in this market. So with the situation here and the continued selling pressure around the $2,000 area, it is reasonable to look out for selling opportunities in this market. And to sell the XAUUSD in this market, what do we want to see that will give us that confirmation that sellers are actually here to stay? Well, to further buttress this current structure and the strength of the buyers here, I connected the series of higher lows. So we have a bullish trend line here, which we shall be using to guide our trading activity for today. Now, to sell the XAUUSD, we want to see that bullish trend line broken to the downside, and that area also shares a confluence with that 1,985 level, which if you look into the past year, it has been a strong selling niche in this particular market. Despite the sharp breakout of the structure here on Monday, we saw that as soon as price dropped below that structure, we saw selling pressure resume around that area. So right now, price is trading above that selling zone. So one thing I want to be seeing here to sell the XAUUSD is to see price action break down the structure to the downside, with selling pressure resume below the 1,985. Then we could actually join that decline to the downside. And the sell setup here on the XAUUSD has a tendency of giving us multiple entries, as we have structures like the 1,970 broken to the downside will be welcoming additional position. Then we have the 1,960 and the 1,945 to guide more trading opportunities. So what we simply want to be seeing around that area is when price breaks down that structures, we scale down to our lower time frame, look out for retest of structure, selling pressure below the structures, then we could add more position to our existing trade. So for the XAUUSD today, I'm still tending towards a bearish momentum here, though we have seen attempt by the buyers to try to break out of the $2,000 level, and you will agree with me that this $2,000 mark is a critical point in this market. And to further buttress this, it is the highest point price action has ever been this year. And for price to actually do a successful breakout of that structure, it needs some time to acclimatize around that area. It's not yet used to that structure, so it still needs some time. So we might likely see some retracement phase in anticipation of building more momentum to actually break out of that level. So I'm still of the opinion that price will still go to the downside on this one. So we have the bullish trend line here as our yardstick for trading activity for today. A breakdown of that structure should be confirming a selling opportunity, which also shares a confluence with that 1,985. So what this simply means is that we want to be having a sell position as long as price remain below the 1,985 level in this market. So let's see what happens going forward. I'm looking out for selling pressure. Let's have our sell stop just below the 1,985 so that we can take advantage of this opportunity. Now, in as much as we look out for selling opportunities here, we also want to keep our options open just in case bullish momentum comes in. Then we take advantage. We can be able to take advantage of that move. But for me, at this point, I'm holding towards a bearish bias on this market. But if a bullish momentum happens, we want to be on standby to catch that move as well. But the only thing that I want to be seeing here on this market structure to be able to buy the XAUUSD for today is to see price action take out the sell position at the $2,000 mark. And what do I mean by that? I want to see price action break out of the structure. In fact, break out that structure significantly well, and then we look out for on our lower time frame, look out for buy pressure above this level. Then this will give me a confirmation and confidence to be part of that bullish momentum. But if this does not happen and price continue to trade below the $2,000 area, then mark my word, we are looking at the 1,985 area to join that decline to the downside. So let's be on standby for either of these opportunities to happen, and I wish you best of luck on the XAUUSD. Then let's go on to talk about the last instrument for today, which is the CADJPY. And in the last 24 hours on the CADJPY, we have been very profitable on this pair. And remember, at the beginning of the week, we were actually looking out for buying opportunities in this market. And the reason why we were looking out for buying opportunity was simply because of the activities of price action just right above that strong demand zone that we identified on the daily time frame. So remember, we had a buy zone here on the daily time frame. Why is my buy zone so long? I must have done something somewhere. Okay. Hold on a second, let me just do some adjustment to this. Okay, all right, so we have a demand zone around this area since December last year. We saw how that area has been a strong buying niche in this market, and I told us all yesterday that I will not be selling unless we have a breach of this breakdown. Then, to further help us to be able to guide our trading activities for yesterday, I told us all about this bearish trend line, which I said will be guiding our yardstick. So we want to be joining a bullish momentum here if price action breaks out of that trend line to the upside. And since throughout the week, we have not seen anything like that. But instead, we saw price action break down that trend line we identified here at the beginning of the week. Remember, we had this bullish trend line, which has been supporting bullish momentum since Monday. Price continued to find higher highs and higher lows. And you can see we had that trend line figured, and I told us all on, it wasn't on Wednesday morning, that we want, if a breakdown of that trend line happens, we want to be selling, because it just shows us that the trend line is no longer strong enough to hold that bearish momentum. And we also saw what happened here. Price action came back to retest of structure. We sold again here yesterday, and during the early hours of today, price finally breaks down that 95.00 level, which I said will be giving us a beautiful confirmation to add more position to our existing trade. So as we are right now, we have a situation where price has dropped significantly well, and since the breakdown, price has moved how many pips now? It has moved about 230 pips in our direction. That's quite massive on the CADJPY, and I congratulate everyone who has been part of this momentum to the downside. Now, with the situation of things right now, how do we intend to trade the CADJPY for today? Well, for those who had missed out on this one, well, I would just advise you to remain patient here. And for those who are still in this trade, you want to be moving your stop loss, secure your current position, and I will be suggesting anywhere right around above the 94.750 level seems most appropriate to secure this position. Now, since the breakdown of the 95.00 level, there is a likelihood that price will come back into that structure, probably prior to the macroeconomic event today or post the macroeconomic event. And remember, we have a major event we are looking forward to for the CAD, which is the retail sales here, which is not that impressive. Okay, I think it's very positive. There is a huge expectation of a 0.7%, which is against the 0.5% of last month. So we want to see how price will be reacting to that structure prior to the event and post the event. So there is a likelihood that price will come back to the 95.00 level. So there are two things that will happen from here, obviously. The first one is selling pressure resume around that area. If it does happen, then we have an opportunity to join another decline to the downside. However, if price action breaks above the 95.00 level and we start seeing buy pressure above the structure, then definitely we want to be in tune with the bullish momentum. And the reason why this is because if price action breaks out of the 95.00 level, it's a sign that the buy zone here, the demand zone we identified on the daily time frame, is still very valid, and the breakdown here could turn out to be a false breakdown. So these are the things we want to be looking at for today. So the 95.00 level will be our yardstick for trading activity for today. So a rejection of this structure will be welcoming selling opportunity, and a breakout retest to the upside will be welcoming buying opportunity in this market. So I hope that we'll be on standby to be able to catch these opportunities. And it's on this note I want to be calling it a day here. It has been a wonderful moment with you guys, but before I do, and for the sake of those who are not part of the beginning of the live session, let's do a quick recap of what we talked about today before we drop the curtain. Now, the first commodity we looked at today is the US oil, and we have been seeing the sell position running since the early hours of today. And in fact, right now you must have had your second or third position triggered at the breakdown of the $67.50 level. So if you are also joined this move right now, well done to you for being on standby to catch this move. I told you that I have my TP target at the $65 level, which happens to be the lowest point price action has ever been in the last 2 months now, and want to see how price will be reacting to the structure to decide if we are going to be adding more sell position to our position. So if a breakdown retest happens, then we want to be selling. But if a resumption of buy pressure resumes around this area, remember this has been a strong support line in the past. If buy pressure resumes, we look out for reversal pattern. It could be a double bottom structure. Map out your neckline of that reversal pattern, a breakout retest, then we want to be joining a bullish momentum at that area. So I wish you best of luck on that one. And for those who are still in the sell positions, kindly move your stop loss order, lock in some profit here, secure this current position as we continue to monitor price action. Then we went on to talk about the US tech for today, which I told us all we have a sell position running just within the potential sell window we identified yesterday, and I told us all that the 12,675 will be our yardstick for trading activity for today. So right now, if you are taking this into consideration, you must have had your sell stop triggered right below the 12,675. So you could have your stop loss somewhere right above the 12,750, which will be about 85 to 90 pips stop loss there. And I told you how this current structure has a tendency of giving us multiple entries, as we have structures like the 12,620 retest of structure welcoming additional position there, 12,550 breakdown retest of structure welcomes additional position, and we can join the move all the way to the downside like that. Then we went on to talk about the GBPUSD, which we have been selling since the beginning of yesterday's trading session, and we have a structure around this area. Now we have a trigger on the below the 1.22100 level. So if you add your trigger there, well done. Let's see how far this is going to go. Your stop loss, where is it going to be? Stop loss should be somewhere right around the 1.22350 level, which is about 30 to 35 pips stop loss there, which also shares a confluence with that bearish trend line. Remember, we said the bearish trend line is our yardstick for trading activity for today. So as long as price remain below the bearish trend line, we shall feel comfortable in our sell position, and at the same time look forward to more opportunities to add more position to our existing trade. And I also told us all here that if we start seeing buy pressure resume here, we don't need to panic, as price might likely come back to retest the structure here, that is the bearish trend line, and the 1.22500 level in anticipation of another wave of bearish momentum. So continued selling pressure or rejection of both of the structures will definitely be welcoming additional sell position. However, in as much as we look out for selling opportunities in this market, we also need to take into consideration the potential of buyers in this market. So I said what we need to see for us to get the assurance to buy the GBPUSD is to see price action take out the bearish trend line, that is break out that structure, which also shares a confluence with the 1.22500 level, where we look out for retest or buy pressure above this area to join that trend continuation to the upside. So that is the only reason we want to be buying the GBPUSD, that is price breaks out of that bearish trend line. Then we went on to talk about the XAUUSD, and on the XAUUSD we already have a sell window between the $2,000 level and the 1,985, and I told you that the continued rejection of the $2,000 level by the sellers in this market is likely going to be sending price crashing to the downside. So we have a sell stop order below the 1,985 to be part of that bearish move to the downside. However, a breakout retest of the $12,000 area, price action taking out all the sell positions here, will be a beautiful signal for a bullish momentum. And I told us all that we don't want to get too excited when price action breaks out of that structure, as we need some confirmation to happen, which is likely going to be coming in the form of a reversal pattern or retest of structure to join that trend continuation to the upside. But for me at this point, I'm still looking forward to a bearish bias on this one, as the continued sell pressure around the $12,000 level is evident enough that sellers are still very strong in this market, and buyers are still not found that ground to acclimatize around that 12,000 area to push price further to the upside. And remember, this is the highest point price has ever been this year, so it's not yet used to that area. We still need some time, and this might likely take some time doing a retracement to gather some momentum to actually have that potency to break out of that $12,000 area. So let's see how price action plays out in the next couple of hours. Then we closed the day with the CADJPY, where we had a massive profit on this one, as price action had moved over how many pips, over 250 pips since the last 48 hours in this market. And I told us all that we are going to be focusing on the $95 area, which will be serving as a yardstick for trading activity for today. And now, what do we want to be seeing around this area? We want to see price either come back to retest the structure, selling pressure resumes around that area to welcome a sell position in this market. And if it so happens that price action breaks above the structure, buy pressure above this level will definitely be welcoming a buy position in this market. And remember, the 95.00 level has been a platform for buying pressure in this market in the last 4 to 5 months now. And one thing we want to be seeing is using the structure as our yardstick. So selling pressure below this level after a breakdown of structure will be a very good sign to join a sell to the downside. But if price action breaks out of that structure and buy pressure resumes, well, you know that we are at the territory of the buyers. If price action climbs above the $95 area, then we'll have no choice than to look out for buying opportunity in this market. So that is that on the CADJPY, and on this note, I want to be calling it a day here. It has been a wonderful moment with you guys on the Extreme Speed community. I want to wish every one of us the best of luck today during the New York session, and I'm very sure and confident that you are well equipped with a bunch of knowledge on how to take advantage of any potential opportunity that the market presents to us during the New York session today. And I hope you also screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision on this instrument that we have talked about today. So it has been a wonderful moment. I wish you best of luck during the New York session today, and I hope that I see you on the other side on Monday morning, 10 a.m. UTC, 11 a.m. UTC West African time, as we come here again to review and get prepared for the new week. On this note, I wish you a wonderful weekend too as well. All right, hello. Okay, I see my Gigi's comment. Okay, you're welcome. All right, same here too as well. I expect gold to drop to the downside, but if it doesn't and we start seeing a breakout of the $12,000 mark, retest of that structure, well, we have no choice than to start joining a bullish momentum at that point. But I'm still very, very bearish on the gold as we head into the last trading hours of the week. Okay, all right, my Gigi. All right, everyone, wonderful weekend to you all. Love you. Bye bye.